All right, let's get into it. An annual report, it sounds like maybe the most boring document on the planet, right? But trust me, if you dig past all that corporate speak and the endless spreadsheets, there's usually a fantastic story hiding in there. A story about power, about crisis, and about the future of a company that, let's be honest, is in pretty much all of our homes. Today, we're going to unpack the latest one from Nestle India and see what it really tells us about where this giant is headed.
Yeah, Nestle. I mean, just think about it. The name is probably sitting in your kitchen cabinet right this second. Whether it's your morning coffee or, those late night Maggi noodles, their stuff is just part of our daily lives. We're talking about a massive, multi-billion-dollar company here.
So that really begs the question, right? How does a company that huge actually decide its future? Who's calling the shots? Well, sure, there's a formal process. But the story behind that process, now that's where it gets really, really interesting.
To really get a handle on where Nestle's going, we've got to look at where it's been. And what's cool is the report itself, through the words of its own chairman, actually takes us on a journey back in time, back to a moment that almost destroyed one of its most famous brands. And what I find amazing here is just how refreshingly honest this is. The chairman, Suresh Narayan, he's talking about the 2015 Maggi crisis. I mean, you remember that, right? The brand was literally pulled from the shelves. It was facing a total existential threat. And he calls it daunting, one of the greatest challenges of his entire career. This wasn't just some business hiccup. This was a full-blown, code-red corporate crisis. But then, the comeback. Instead of doing some boring traditional relaunch, they took a huge risk. Apparently, a young brand manager had this idea, hey, let's sell the first new batches of Maggi online. And the result? Get this, 60,000 boxes were gone, poof, in under 5 minutes. Just wow. Talk about an incredible display of brand loyalty. It was a huge signal that this company could bounce back. And the chairman wraps up this whole crazy story with this really powerful quote from Rabindranath Tagore. The message is clear, right? It's not about trying to avoid danger. It's about being fearless when you have to face it. And that whole philosophy, turning a disaster into a source of strength, that's the legacy he's leaving behind. And it really sets the stage for everything that's happening now.
Okay, so how does all that past drama connect to what's happening today? Well, it all leads to this very formal and, let's be honest, much less exciting looking document. But this document is what decides the company's entire future. It's the notice of the annual general meeting, or as you'll hear it called, the AGM. So what in the world is an AGM? Well, think of it like this. It's the single most important meeting a company has all year. It's the one time where the actual owners of the company, that's the shareholders, get to stand up, have their say, and vote on the big stuff. It's really just a giant town hall meeting for shareholders. Now, the agenda for these meetings can look super complicated, but it pretty much boils down to 3 main things. First, you've got to approve the money. That means signing off on the financial reports and deciding on dividends. Second, you appoint the leaders, the directors who are going to steer the ship. And third, you hire the watchdogs, the auditors who make sure all the numbers actually add up. It's simple. Money, leaders, and watchdogs. That's it.
This year, though, there's one thing on that agenda that's a much bigger deal than all the rest. It's all about leadership. The guy who navigated the company through its absolute biggest crisis, he's retiring. And now the shareholders have to vote to approve his replacement. This, my friends, is the main event. So let's look at the players. On one side, you've got Suresh Narayanan, the veteran, the guy who literally saved Maggi. And on the other side, his successor, Manish Tiwari. He comes from a completely different universe. He was a country manager at Amazon India for 8 years. I mean, think about that transition for a second. It's fascinating. You're going from a crisis manager to an e-commerce guru. It's a massive signal that Nestle is betting its future on being digital first.
So what's the price tag for a leader with a background like that? Well, the AGM notice lays it all out. It's actually super transparent. The shareholders have to vote on the new MD's proposed pay package. So let's break it down, shall we?
Okay, first up, you have the basic salary. The proposal on the table is for a salary of up to 4.5 million rupees a month. That's the starting point, the foundation of the whole package. Then, on top of that, there's a commission that's tied to performance, and this could be up to 100% of his yearly salary. So a huge chunk of his pay is directly linked to how well the company does. It's all about incentives. And now, here's the big one. A one-time joining payout of almost 152 million rupees.
The report explains that this is basically to make up for the long-term incentives he was giving up by leaving his old job. But man, that is a huge number. It just goes to show you how intense the competition is to get top-tier executive talent these days. Now, I know all of this can sound like stuff that happens in some far-off fancy boardroom, but the whole point of this AGM notice, this whole process, is to bring these decisions right to the shareholders. It really is about putting the power in their hands. So here's the bottom line. This is not just a formality. It's not about rubber stamping what the bosses want, approving the money, approving the leaders, approving how much they get paid. This is the bedrock of how a company is governed. It's how every single investor, whether you own 1,000 shares or just one, gets to hold the management of this global giant accountable. And you know what's cool? The whole process is actually super easy now. Like the notice explains, any shareholder who's eligible can vote online. You just log into the official NSDL portal, that's the National Securities Depository Limited. You find the Nestlé voting event and boom, you can cast your vote on every single one of the issues we've just talked about. I mean, look at this. It just shows you how simple it is now. You don't have to show up to some stuffy meeting room anymore. You can actually do it all and cast your vote right from your phone with the NSDL app. It's literally corporate democracy right there in your pocket. So, when you piece it all together, you see that an AGM notice is so much more than just a boring old document. It's really a snapshot of a company at a major crossroads. It's looking back at its biggest crisis while making these huge, game-changing decisions about its future leadership. And that leaves us with one big question to chew on. With a leader from the world of Amazon and e-commerce taking over, what is Nestlé's next chapter actually going to look like?
Have you ever wondered what's actually going on inside the head of a massive company? Well, today we're going to peel back the layers on Nestlé India, and we're going to do it by diving into one of their most important documents of the year, the annual report. As you're about to see, this thing is way more than just a bunch of numbers. It's their entire game plan laid out for everyone to see.
And it all kicks off with this really powerful quote from the company's outgoing chairman. Now, this sentence, it isn't just a nice little platitude. It's basically the key that unlocks the whole story Nestlé wants to tell us about its last decade. It's a story all about turning huge challenges into even bigger wins.
And they're not subtle about it. This theme, adversity makes us stronger, is literally plastered right on the cover of their annual report. So that tells you right away we're not just getting a dry financial summary here. Nope, we're getting a story, a very carefully crafted story about resilience, about a giant that sees its toughest moments as its most important ones. So what is that story? Well, the report frames the last 10 years as a time of navigating what they call black swans, those totally unpredictable massive events, and gray rhinos, which are those huge, obvious threats that people tend to ignore. And their biggest test? Oh yeah, it started with a crisis that I bet a lot of us remember really, really well.
That's right, the 2015 Maggi crisis. The report itself uses some pretty dramatic language, saying the brand went from market leadership to near extinction. I mean, just for a moment, one of India's most iconic, most beloved products was completely on the ropes. This was, without a doubt, the ultimate test of adversity for them.
So how on earth did they bounce back from that? The report actually points to a pretty fascinating detail. Their big comeback strategy, it wasn't traditional at all. They decided to relaunch Maggi online through Snapdeal, and get this, they sold 60,000 boxes in under 5 minutes. It was this bold digital-first move that really proved they could come back fighting. Okay, so that whole history of adversity, it really sets the stage for what's coming next. And the future? That gets decided right here, in the notice for the 66th Annual General Meeting, or AGM for short. This document is the official playbook for the year ahead.
So what exactly is an AGM? You can basically think of it as a company's annual town hall meeting. It's the one time of year where the leadership has to report to the real owners, the shareholders, and those shareholders get to vote on all the big decisions that are going to steer the ship for the next 12 months.
The agenda for these things is usually split in two. First, you've got ordinary business. This is all the routine, nuts and bolts stuff they do every year, approving the financials, declaring dividends, that kind of thing. But then you have special business. This is where the big one-off decisions happen. And let me tell you, this year, there are some very big ones on the table. So let's just follow the agenda. And we'll start with the part that pretty much everybody understands, the money. First up on the docket is approving the company's books and figuring out what to do with all the profit they made. The board is proposing what's called a final dividend. It's basically a cash payout of 10 rupees for every single share someone owns. It's a direct reward to the company's owners for sticking with them. But as you'll see in a second, that is not the whole story.
See, that 10 rupees is just the final piece of the puzzle. It actually comes on top of two other interim dividends they already paid out earlier in the year. A lot of companies do this to give investors a steady stream of returns. So when you add it all up, the total payout for the year is actually 27 rupees per share.
The agenda also has some other really important financial approvals. For instance, the shareholders have to vote on the payment for the company's cost-auditor. Now, this is an independent group that comes in and makes sure the company's numbers on production and operations are all accurate. It's a super important check and balance.
All right, so we've talked about the money. Now let's talk about the people.
This year's special business includes a massive leadership transition. We're talking about a real changing of the guard at the very, very top of Nestlé India. So, Suresh Narayanan, the guy who led Nestlé through that whole adversity decade we just talked about, he's retiring. And the person taking his place is Manish Tiwari, a super seasoned executive who's coming over from Amazon India after a long career at Unilever. This is a huge deal. It's going to set the entire direction for the company's next chapter.
Of course, when you appoint a new leader, it comes with a proposed pay package that the shareholders have to vote on and approve. And it's broken down into a few different parts. You've got a base salary, some pretty substantial allowances, and then performance-based commissions. But look at that last item, a big one-time payout. What's that about? Well, it's to make up for the long-term incentives, think stock options, that he had to give up by leaving his old job. It's actually a pretty common, though sometimes controversial tactic to attract the best of the best.
Okay, so we've got dividends, auditors, a brand new CEO, but how do these huge decisions actually get made? Well, that brings us to the final and maybe the most important piece of this entire puzzle, the shareholder vote.
It's a great question, right? I mean, in a company that's owned by thousands, maybe millions of different people and institutions, how do you get everyone to agree on anything so you can move forward? The answer is in a very structured and these days a very digital process.
Here's the play-by-play. First, to even be eligible to vote, you had to be a shareholder by the cutoff date, which was June 19th. Then, a remote e-voting window opens up for 3 days. This lets people vote from literally anywhere. The whole thing then wraps up at the virtual AGM itself on June 26th.
And we're not talking about some old-fashioned mail-in ballot here. Shareholders can just log into a website or even use a mobile app to cast their vote. It's basically corporate democracy designed for the smartphone era. It's never been easier for the owners of a company to actually have their say.
So, as we start to wrap this all up, let's bring it right back to where we started. All of these seemingly formal, maybe even boring procedural steps, the voting, the appointments, the financial stuff, they aren't just corporate housekeeping. They are the very engine that drives resilience.
I mean, think about it like this. Approving the finances, that gives the company the stability it needs to weather any storm. Appointing a new leader, that sets the strategic direction for the next 10 years. And giving every single shareholder a voice, that makes sure the leadership is held accountable. This whole process, this is the company's blueprint for becoming stronger through adversity.
Which leaves us with one final, kind of provocative thought to chew on. We've seen the game plan, we've seen the players, we've seen the whole process. But in a modern corporation with millions of owners, from giant investment funds to regular folks with just a few shares, who really holds the power to shape its destiny? It's definitely something to think about. Thanks for joining this explainer.